Hey guys, this is Ehab. One of the investment options nowadays are Bitcoin or cryptocurrency. It surely has found its place in the investment world and have caught the eyes of many investors, more specifically millennials. Cryptocurrencies are technology driven by its nature, and the IRS and the taxing authorities are trying to catch up for the fast evolving market. So they're trying to come up with new guidance every single year, trying to catch those markets and see what's evolving and how they can get their tax portion out of it. For example, in 2014, the IRS issued partial guidance on cryptocurrency. The IRS stated, for federal tax purposes, cryptocurrencies or virtual currencies are treated as properties. They're not treated as an actual currency. In my opinion, that is a simplistic yet effective way to mitigate that issue that is still evolving to this day. So despite how you use it or how you sell it or buy it, cryptocurrencies or virtual currencies, they're not an actual currency in the IRS's eyes. The way the IRS sees it is that it's a capital asset and it should be treated just like stocks. So that basically means just like a stock. By the time you sell it or transfer it, you have to subtract how much you paid for it, and that difference is the gain that you have to pay taxes on it. That's actually good news. If you're trying to hold Bitcoin or cryptocurrency for a long term, you're basically getting a preferred tax treatment because you're not getting treated as an ordinary income. This is going to be taxed as a capital gain. Because let's think about it for a second. If it was treated as a currency, which means just like the dollar, if your income goes from $50,000 to $200,000 a year, automatically you're going to be taxed in a different tax bracket and you're going to pay a lot of taxes on that money. On the other hand, cryptocurrency or Bitcoin, since it's treated as a capital asset, which is just like a stock or any other property, that means you're only paying capital gains taxes, which is 15 to 20% max if you're paying capital gains on it. So if you hold Bitcoin or cryptocurrency for more than 1 year, it's going to be treated as a long-term capital gain, and then you're going to pay 15% on the gain, or it could be as low as 0% capital gain taxes if you make less than $80,000 per year. Now, on the other hand, if you hold it for less than 1 year, which is going to be a short-term capital gain, unfortunately, that's going to be treated just like an ordinary income. So whatever that income or gain that you're going to get from selling Bitcoin or cryptocurrency, you're going to add it to your regular income, whether it's your job or your business, and you're going to be taxed on that amount. Now, the great thing about this is that since the IRS treated it just like stocks, the great thing about it is that you can actually buy Bitcoin or cryptocurrency and put it in your 401k, Roth IRA, whatever retirement account that you have. That way, since it's treated just like a stock, even if it goes up in value, which we have seen that it actually does go up in value quite significantly over the past few years, then you're not taxed on that amount. You're only taxed on it when you actually cash into your retirement account. At the same time, for example, if you bought Bitcoin or cryptocurrency, you held it for a few years into a retirement account, it's tax deferred, and for example, it went significantly up in value, and you decide, for example, you don't want to take the risk anymore, you want to sell it and just take the cash, you can actually sell it within the retirement account. Since it's tax deferred, you can sell it and keep the money within the retirement account. You don't have to pull it out. And you're not getting taxed on that money. You can roll it over into something else. You can buy another different type of stock. You can leave it as cash within the account on the retirement account. Whatever the case might be, as long as you're not taking the money out of the retirement account, you're not taxed on that money. Now, a few things to keep in mind when you own a Bitcoin or a cryptocurrency, especially when it comes to taxes. Since this is a new technology and it's not really as straightforward as owning a stock, for example, a lot of the brokerage firms that you buy the Bitcoin from or through, they don't actually send you a 1099, which I have seen with my own clients. They don't receive a 1099 telling them how much they bought the Bitcoin for and how much they sold it for, how many Bitcoins or cryptocurrencies they have bought or sold, and that doesn't really help when you try to prepare your own personal taxes. Because ultimately the IRS tells you this is your responsibility as a taxpayer to let us know if you actually bought, sold, transferred, or did anything with cryptocurrency. So it is your responsibility to let the IRS know so they can tax you on it. So it is best to keep heavy documentation on every single transaction that you do when it comes to Bitcoin or cryptocurrency. For example, if you have documents notifying the sales, acquisition, transfer, and at the same time, the fair market value of the Bitcoin or cryptocurrency at that specific time when you did the sale or transfer or the purchase, whatever the case might be. Just keep heavy records of every single transaction that you do. That way it helps you when it comes to your tax time, or if you get audited by any chance. And if you actually want to see how the IRS is catching up to these things, just look at your 1040 form in 2020 and compare it to 2019. The IRS is straight up asking you on the 1040 form, the first page, they're asking you, have you ever sold, received, purchased, acquired, or any type of transaction that you have did when it comes to cryptocurrency or a Bitcoin. And you have to answer that question on your 1040 form in 2020. And my guess is going to be more and more updates coming because the IRS is trying to catch up on these things and trying to implement more guidance to help you and help us as tax preparers to go through the sale and acquisition and the purchase and transfer of the Bitcoin or cryptocurrency. So anyone that makes income or even a loss on a cryptocurrency, they have to report it on the 1040 form. And it's your responsibility ultimately as a taxpayer to actually report it to the IRS. Of course, the tax system is a self-reporting system, so technically no one is sending you a bill unless they get notified of something. So if someone sends a 1099 on your behalf, you don't know about it, it's pretty much a self-reporting system. The IRS will know about it, they will send you a letter to let you know, hey, you owe us money. But besides that, they're not gonna know. But again, you don't want to take your chances to get audited or anything in the future, and then they will see some kind of transaction related to Bitcoin or cryptocurrency that you have never reported. The amount of penalties and interest that you're going to pay in the future, it's really not worth it to take that chance. So it's better to just report it ahead of time, make everything clear, have your documentations ready. In case you get audited, it's not a problem. So the way you determine how much you're actually going to pay taxes on your cryptocurrency, you need 4 things. It's very simple. You need the purchase date, purchase amount, sale date, and sale amount. That's pretty much it. So to put it in perspective, for example, if you're doing some kind of service and you received a Bitcoin or a cryptocurrency in exchange for that service, you have to report the fair market value at that time when you received the Bitcoin or the cryptocurrency and report it as an income on your personal tax return. Same principle applies if you are purchasing a cryptocurrency. Whenever you purchase it, just record the purchase date and the actual cost, how much you paid for it to get the cryptocurrency, and record it as such. That way, when you turn around and try to sell it in the future or give it to someone in exchange for a service or a product, you'll know exactly how much you're paying. When it comes to taxes, it's pretty simple. Since you have all these 4, the purchase date, purchase amount, sale date, and sale amount, you're basically going to subtract how much you sold it for from how much you paid for it. And then the difference is actually your gain or loss for that matter. So just keep these important steps in your mind and keep thinking about the tax consequences of these things when you're trying to think whether investing in a Bitcoin or a cryptocurrency is actually a good step for you, and whether you want to include it just as a brokerage on the side or you want to invest it into the 401k, Roth IRA, or whatever the case might be. Just think about that you have to keep heavy records for all these things in case of an audit, and at the same time when you're trying to report it on your personal taxes, you actually have good documentation to present to your CPA, and then they will take care of the whole filing for you. That's it for today, guys. I hope that was helpful, and until next time.